PantheonAI presents Tesla delays Robotaxi, Disney sues AI, Nasdaq wobbles. Good morning, everyone. Welcome to the PAI Morning Briefing. I'm John, and it is June 11th, 2025. Hope you're all ready to dive deep into the daily currents of the market with us. We've got a broad spectrum to cover today, from the pulse of our major indexes to some exciting corporate moves, and even a few tidbits that might just make you smile as you sip your morning coffee.
Absolutely, John. I'm really looking forward to this. It feels like there's always so much happening, and today is certainly no exception. Where should we kick things off?
Let's start with a quick market overview, shall we? The S&P 500 is currently hovering around 6,042, experiencing a slight dip of about 0.12%. Nothing too dramatic, but it's a subtle signal that investors are feeling a bit cautious this morning.
Right, a little bit of hesitation there. But then, on the other hand, the Dow Jones is actually showing a bit more resilience, isn't it? Up approximately 0.28% at about 43,600. It seems like the industrial giants are holding firm, finding some steadiness amidst what you're describing as a mixed market.
Exactly. And then we have the Nasdaq, the tech-heavy index we all know so well, trading down by nearly 0.33% at just under 19,714. That certainly reflects the volatility we've come to expect from the tech sector these days, wouldn't you say?
Oh, absolutely. Tech always keeps us on our toes. And the smaller cap Russell 2000 is also down a bit, about 0.19% at around 2,159. So it really reinforces this idea that today's market is characterized by small, measured moves, rather than those huge leaps we sometimes see.
That's a good way to put it, Sarah. Now, switching gears to the crypto arena, Bitcoin is trading at just over 109,600, with a slight decline of roughly 0.59%. Just another reminder that digital currencies can be as temperamental as they come.
Temperamental is right, but on a more optimistic note for crypto enthusiasts, Ethereum is showing a healthy rebound, up by around 1.66% at roughly 2,861. It makes you wonder if perhaps Ethereum's ecosystem is picking up speed, or if investors are simply shifting their focus within the digital asset space.
That's a fascinating question. Now let's drill down into some major market trends that are really capturing headlines. We've seen this pattern of cautious optimism with mixed signals across various sectors this morning. Take the Nasdaq, for instance. Earlier in the session, it had actually traded higher by as much as 85.47 points, a significant jump that had investors buzzing. But that momentum didn't last, and then the index pulled back by about 40.42 points.
Ugh, the classic tech roller coaster, right? If you're holding a nascent portfolio in that space, you know exactly what that wild ride feels like. So what do you think is driving such moves, John?
Well, part of the story is that individual tech giants like Nvidia, Intel, and AMD have registered modest losses. Nvidia shares are down by about 0.64%, while Intel and AMD aren't far behind in the red. The tech sector, always a bellwether for innovation and investor sentiment, often reacts strongly to earnings reports, shifts in global demand, and even regulatory murmurs.
And if you think that's a bit too dynamic for your taste, just remember that sometimes volatility is simply the consequence of innovation moving at breakneck speed. It's a trade-off, isn't it? What's really interesting to me is the juxtaposition happening between that solid industrial performance we mentioned earlier and this tech volatility. The Dow, representing those established players, is getting a lift.
It really highlights the evolving risk appetites among different investor segments. It's as if some market participants are saying, let's take a break from tech and stick with what we know, while others keep their eyes fixed on innovation and growth.
It's a tale of two markets, in a way. So let's transition now to a comprehensive rundown of some important stories that are making waves today. What's caught your eye beyond the general market trends?
One headline that really jumped out at me this morning, again, is about the Nasdaq index. That earlier upward move, as I mentioned, reversed quickly, leaving it at a session low after falling by 40.42 points. And that reversal came amid a flurry of stock-specific challenges, particularly with those giants, like Nvidia, Intel, and AMD. The tech world is always buzzing with rapid changes, and it seems even slight missteps can create cascades of caution.
That's so true. And equally intriguing is the report on Tesla. The electric vehicle giant has chosen to delay its highly anticipated Robotaxi debut in Austin. Now, for many Tesla investors, that might be seen as a setback, but I've heard some chatter that insiders suggest this delay is actually a reflection of Elon Musk's broader strategy. There's talk he may be focused on regaining favor with influential political figures. What do you make of that?
It raises a crucial question, doesn't it? Are these delays simply tactical pauses, or do they signal deeper structural changes within Tesla's innovation pipeline? It's always a puzzle with Tesla. And not too far from this, General Motors is making headlines of its own. Rather than taking a leap of faith by building entirely new production facilities, GM is opting for a substantial investment of $4 billion to expand its existing capacity.
That's a smart move. One analyst pointed out that the market seems to really appreciate this conservative yet forward-thinking approach. It's about calculated risk, banking on the belief that bolstering what already works can sometimes be a safer and ultimately more profitable strategy. Quite a contrast to the high-flying tech narratives we just discussed, wouldn't you say?
Absolutely. It's a different philosophy at play. Now, turning to the entertainment and creative sectors, a significant legal battle is underway. Disney and Universal are taking Midjourney, an AI image company, to court over allegations of copyright infringement. The suit claims Midjourney has used iconic imagery from franchises like Star Wars and The Simpsons without proper authorization.
Wow. This case could have broad ramifications for the future of AI-driven creative content. It poses such an important question. As technology evolves, how do established intellectual property laws keep pace with new forms of content creation? While we all love a good sci-fi flick, this is real life, and the legal frameworks are going to need to morph rapidly to address these emerging challenges.
It's a whole new frontier. In a slightly different domain, cybersecurity is really gaining its moment in the spotlight. Securonix, a well-respected player in the world of security information and event management, recently announced its acquisition of ThreatQuotient. That sounds like a power move.
It definitely is. This is set to broaden their threat detection and response capabilities significantly. With cybersecurity threats growing in complexity and frequency, this acquisition could signal a new era of comprehensive threat protection for many businesses globally. It's a timely reminder that in today's interconnected world, security isn't just an IT issue, it's a business continuity imperative.
Couldn't agree more. And then there's the financial services sector, where Wolters Kluwer recently wrapped up its acquisition of Brightflag. This move is expected to enhance their portfolio significantly, sharpening their edge in legal and regulatory technology, among other services.
As businesses continue to face mounting regulatory demands, having integrated solutions like that is becoming ever more crucial. This acquisition is yet another sign that companies are doubling down on technology-driven efficiency to stay ahead of compliance challenges. It's a smart play.
Moving to the social policy front, there's been some chatter about the future of Social Security. According to recent data, your Social Security check could see an increase of around 2.5% in 2026. However, the discussion is far from celebratory, as concerns over inflation and tariffs remain prominent.
It serves as a dual reminder, doesn't it? While increases might offer some relief, the broader economic environment still poses significant challenges for retirees and policymakers alike. And speaking of challenges, tax issues have subtly crept into the conversation too.
Oh, yes. One interesting story making the rounds involves an individual who transferred company stock out of an old 401k retirement account and is now dreading a potentially nasty tax surprise. The concept of net unrealized appreciation in such scenarios is a reminder that tax strategies in retirement planning are more complicated than a simple balance sheet swap.
Definitely a cautionary tale for anyone tempted to make what seems like an easy transfer without fully understanding the tax implications. You really need to do your homework there. Real estate is another sector where investor psychology and consumer sentiment are in focus.
It is. A recent survey has revealed that nearly 45% of American homeowners harbor regrets over buying their current home. And the number one culprit? Unexpected maintenance costs and hidden fees.
That's heartbreaking, but not entirely surprising. It's a heartening reminder that sometimes the biggest surprises in a deal aren't the glaring features on a sales brochure, but the nitty-gritty details that reveal themselves only after you've signed on the dotted line. For those nearing retirement, there's also an insightful discussion on whether individuals with a state pension need to save as rigorously as others.
Right. In a brief interview snippet from a seasoned financial advisor, he mentioned that even those expecting a state pension should consider a sound savings plan, especially in today's unpredictable economic climate. It's a conversation many of us, especially in our mid-40s to 50s, can relate to, considering the complexity of retirement planning these days.
Absolutely. With all these stories, John, one might ask, what do they collectively tell us about the state of the market? Is it a period of cautious optimism, or are we teetering on the edge of significant shifts?
That's the million-dollar question, Sarah. There's no one-size-fits-all answer, but it's clear we're navigating a landscape full of contrasts. On one hand, we're witnessing substantial investments and strategic acquisitions that promise to reshape industries in the long run. On the other, we have notable hesitations and regulatory battles that seem poised to redefine operational boundaries.
It's truly dynamic. Let's take a more detailed look across sectors to better understand where opportunities and concerns lie. In the technology sphere, that constant evolution is both an asset and a challenge. Companies like Nvidia, Intel, and AMD continue to drive conversation, but those fluctuations we witnessed on the Nasdaq remind us that innovation often comes with sharp curves.
It's almost as if the tech sector is that friend who's always a bit unpredictable, brilliant and inspired one moment, and then acting like they forgot their wallet the next. Investors are excited about future possibilities, but equally cautious about immediate risks. Energy is another sector that demands our attention. While not directly in today's headlines, the dynamics of global energy markets constantly play a behind-the-scenes role.
Right, with shifts in geopolitical alignments and the persistent drive towards renewable energy stocks remain under the microscope. Investors are keeping a close eye not just on oil and gas, but also alternative energy sectors that could benefit from increasing government support and innovation. This dual focus creates a balanced view where traditional energy robustly meets emerging green technologies, a fascinating interplay.
Definitely. And finance, as always, is a cornerstone of our discussions. The recent acquisition moves by Wolters Kluwer and Securonix really underscore the importance of integration and technological advancement in this space. As regulations tighten and cyber threats become more sophisticated, financial institutions are in dire need of advanced tools to safeguard assets and ensure compliance.
These mergers and acquisitions aren't merely consolidation moves. They represent a strategic pivot towards smarter, tech-infused operations. In a sense, the finance sector is gearing up for a future where traditional methods merge seamlessly with cutting-edge technology, creating opportunities for both enhanced efficiency and new kinds of risks that we must be vigilant about.
That's a great point. Shifting our gaze to global market implications, the patterns we see here on our home turf are mirrored by shifts abroad. For instance, while our domestic indexes show modest fluctuations, international markets are grappling with their own stories, from policy changes to technological advancements.
Asian markets, for example, have been quick to respond to similar trends in tech volatility, while European markets have reacted to regulatory shifts in the financial sector. These global ripple effects serve as a reminder that in today's interconnected economy, a move in one part of the world can easily resonate across continents. Investors really would do well to adopt a global perspective when making strategic decisions.
Indeed. Now let's move on to expert insights and predictions. Based on current trends, it's fair to say that caution remains the watchword in the near term. With the tech sector showing signs of both promise and volatility, many experts are advising a balanced approach, diversifying portfolios and not overcommitting to rapid growth sectors, despite their allure.
And meanwhile, the industrial and financial sectors, with their more stable contributions, are likely to provide a buffering effect during periods of market turbulence. As for cryptocurrencies, the diverging trends between Bitcoin and Ethereum are just so interesting. It indicates that investors may need to differentiate their approach based on the underlying technology and market sentiment. I find it fascinating how, in a way, Bitcoin is like the seasoned veteran who's seen it all and prefers to play it safe, while Ethereum is that young upstart brimming with energy and risk-taking spirit.
That's a perfect analogy, Sarah. And before I wrap up this segment, a little humor to lighten the weight of market predictions. Why did the investor bring a ladder to the market? Because he heard the stocks were climbing.
Good one, John. Always appreciate a bit of levity. But all jokes aside, these ups and downs are what keep our discussions lively and remind us that sometimes the only certainty is change.
As we start piecing together our day's comprehensive picture, it's clear that each of these stories contributes to a broader narrative, a narrative of a market that is dynamic, cautious, and full of opportunities for those who can read between the lines. Every news article, every corporate move, every data point tells a story of strategy, risk, and ambition that we as investors need to understand and navigate effectively.
I think one of the underlying themes emerging across today's stories is the importance of strategic timing. be it in initiating or delaying product rollouts, investing in technology upgrades, or even deciding when to press the accelerator in the crypto market. Tesla's decision to delay its Robotaxi debut, for example, might be interpreted as a sign of careful recalibration rather than a stumble.
And similarly, GM's investment in its existing capacity is a testament to the idea that sometimes incremental improvements yield greater value than ambitious yet untested projects. Another recurring theme is that balancing act between innovation and regulation, as seen in the Disney and Universal lawsuit against Midjourney.
Companies are increasingly finding themselves at the intersection of creative expression and legal constraints, and this tension is likely to intensify as artificial intelligence continues to push boundaries. It's a fascinating conundrum. How do you be both pioneering and compliant? The answers might not be simple, but they are certainly stirring strategic discussions in boardrooms worldwide.
Absolutely. Then we have the dual nature of cybersecurity and financial regulation. With Securonix's acquisition of ThreatQuotient and Wolters Kluwer's graceful expansion via acquiring Brightflag, we witness a definitive shift in how companies are preparing for the future. They are not only anticipating threats, they are building robust systems to detect and neutralize them at their roots.
In a rapidly changing world where digital threats can emerge out of nowhere, being proactive is key. Now, turning to sector-specific insights again. In the technology sector, that ongoing oscillation between rapid innovation and market corrections forces companies to strike a delicate balance. While many investors find themselves caught in the whirlwind of daily losses and gains, the underlying fundamentals in tech continue to evolve. There's a sense that, despite short-term dips, the longer-term tech narrative remains bullish, provided companies continue to innovate and deliver value. The question for many of us is, how do we tune our investment strategies to ride out these periods of volatility while staying committed to growth sectors?
That's a critical question. The financial sector is evolving as well, albeit at a more measured pace. With regulatory requirements tightening and cybersecurity threats looming larger than ever, financial institutions are accelerating their digital transformation initiatives. The recent acquisitions we mentioned serve as strategic moves to create more resilient, integrated operations. It's clear that in the coming years, the finance world will likely see even greater collaboration between traditional financial expertise and advanced technological solutions. It begs the question, as a long-term investor, how much weight should we place on a firm's ability to innovate in areas like cybersecurity and compliance?
That's a really good point, John. In energy, while the headlines today might not have focused extensively on the sector, the underlying theme remains unchanged: transition and transformation. We're at a juncture where traditional energy sources are gradually being supplemented by renewable alternatives, driven by both technological breakthroughs and policy shifts. Investors in energy stocks are increasingly mindful of environmental, social, and governance factors, hoping to strike a balance between dependable cash flow and future sustainability.
It's a complex balance. As we shift gears to consider global market implications, it's clear that domestic trends today are not isolated events. The world is watching as developments across various sectors create ripple effects internationally. When Silicon Valley experiences a tech correction, European tech hubs quickly adjust their forecasts. When industrial giants in the United States show stability, emerging markets may interpret it as a sign of steady global demand.
And when shifts in cryptocurrency valuations occur here, investors worldwide take note. The interconnectedness of today's financial markets means that sometimes a subtle change on one side of the world can have profound implications on the other, a point worth pondering as you plan your global strategy for the coming week.
Absolutely. Before we close our discussion, I'd like to share some expert insights and predictions based on the trends we've observed. It's my belief that while volatility will continue to characterize the tech and crypto sectors in the near term, a more measured and sustainable approach is emerging among larger, more established companies. In other words, while the playground of startups and emerging tech always promises high reward, the real stories of long-term success may lie in how traditional companies innovate from within. For instance, GM's strategy of expanding its existing capacity rather than building from scratch is emblematic of a broader principle: sustainability through smart growth.
That's a really insightful perspective, John. And moreover, the legal disputes we're witnessing in the creative AI realm, such as the case involving Disney and Universal versus Midjourney, underscore that intellectual property and technological innovation are converging in ways that require a new regulatory mindset. There's an opportunity here for investors to look beyond earnings reports and focus on companies that are not only profitable, but are also prepared for the inevitable regulatory shifts that come with disruptive technology.
I find myself asking a few thought-provoking questions as we head into today's trading hours. For those of you deeply embedded in tech, how will you adjust your positions given the current mix of excitement and volatility? For those more bullish on the rebuilding of industries through smart acquisitions and expansions, what do you think about companies like GM and Wolters Kluwer as they navigate these transformative times?
And for our crypto enthusiasts, do you see Bitcoin's relative caution as a sign to hold steady, while Ethereum's upward move signals a time to perhaps reassess your allocations? These are the kinds of questions that make each market day not just about numbers, but about interpreting a story that is as dynamic as it is unpredictable.
As we begin to wrap up today's briefing, let's summarize some of the key takeaways. First, the major indexes, S&P 500, Dow Jones, Nasdaq, and Russell 2000, are showcasing a landscape of modest movement that reflects broader economic sentiments. Bitcoin and Ethereum remind us that in the world of crypto, caution and opportunity often exist side by side.
Second, our deep dive into market trends uncovered a narrative of fluctuating investor sentiment, especially in the tech sector, where high highs and low lows have become the norm. Third, the array of corporate news, from Tesla's cautious postponement of its Robotaxi debut to GM's strategic capacity expansion, from cybersecurity acquisitions to creative legal battles, all paint a picture of industries at a crossroads between traditional stability and innovative risk-taking.
And let's not forget the global perspective. Whether it's the international ripple effects of domestic trends or the global policy shifts impacting energy and finance, every decision we make as investors must be viewed through a worldwide lens. This dual perspective ensures that we remain prepared for whatever surprises the market has in store.
Before I sign off, I'd like to give a hearty shout-out to PantheonAI, your information copilot in navigating this sea of data and insights. As you think about these trends and the questions raised today, I encourage you to stay curious and actively engage with the market in a way that is both informed and measured.
After all, wouldn't you agree that true learning is best done continuously, rather than cramming it all into one day? So as you head off to make your trading decisions or simply enjoy another cup of your favorite brew, remember, markets may be unpredictable, but our pursuit of knowledge never should be. Consider how you might balance innovation with stability in your own strategies. Are there sectors that you feel are poised for future growth even if they're experiencing short-term setbacks? And how might shifts in global economic policy affect your personal portfolio decisions in the coming months?
Fantastic questions to ponder. Thank you for joining us on this comprehensive dive into today's market landscape. Stay tuned for the next episode tomorrow. And as always, feel free to reach out with your questions. Our AI copilot is here to help guide you through these fascinating times. In the complex, ever-changing world of finance, staying informed is your greatest asset.
Until next time, keep asking questions, keep exploring, and remember that learning shouldn't feel like a full-time job. Have a great day ahead and happy investing.
PantheonAI, your information copilot.
Because learning shouldn't feel like a full-time job. Take care and see you next time.